Good morning. This is Chili, aka Curtis, and I'm back to do another video today. If you like this content, please click the like and subscribe. Also click the notification bell so that you can get updates on when I release new content. So today I'm here in my Robinhood portfolio, and I'm just looking at the performance over the last week or so. It's been up and now it's down and now it's back up, but it's stocks, that's normal. So I'm excited. I just wanted to share what I've got going on here in my Robinhood portfolio today. I've got some Amazon, I've got some Google, some CrowdStrike, some Snap, some CMG or Chipotle, some Shop, and some Uber. So I'm building those positions in these tech stocks and Uber and Shopify. So part of my video today, I just want to discuss, dividend stocks and, the value of having dividend stocks, and talk about my journey, because it wasn't too long ago, back in 2019, where I started with $7,000. And today I have a portfolio size of $48,000. And basically how I started the stock portfolio is I started with a company called NRZ. And many of you may not be familiar with this company, but this is new residential investment. And it was not a fast moving stock, a growth stock. It was a dividend stock, because with the dividend stock, you can just about almost guarantee the price from day to day or week to week. Maybe not the exact price, but the range. So when I started building my portfolio, as you can see, it's very flat, a little curve, but most of that was my initial investment of all NRZ. And, as you can see, 52-week high, $11. So right now, NRZ for the last 6 months have traded right around the $10 to $11. And that's typically what any dividend stock will do. I'll pull up one more, AT&T. We're just going to do 6 months, and you'll see the same pattern: $28, $31. So that's the value of dividend stocks. They don't go up and down. They're great. Again, you can look at the 52-week high and the 52-week low. You're not going to see a whole lot of change, because the purpose of the dividend stocks is when a mature company decides to pay out its shareholders over a long period of time. Now, if you work for these companies, they're excellent, because let's just look at the max, and let's just say there's a lot of, at least here in Alabama, there's a lot of AT&T millionaires. And so back in the 80s, had you invested in AT&T, you would have got the share for $13.40 back in 1990. And, people lived their whole life working at just one company back in the 90s. That used to be the old paradigm. You went to college, or you got some training, maybe came out of the military or service, and then you went to work for AT&T, what we call here in the South Bell South, or you went to work for Alabama Power Company. I know in the Northeast, you got Verizon. Many people did the same thing. They came out of their service or came out of college and they went straight to work for Verizon. And so it made sense, if you work for them through the 90s. And as you can see, as telecommunications took off, it was a great company to work for. Cell phones were just coming online 1998, 99. So, this is where all this growth is from. And so this goes back to the old principle of when you work for a company, they give you some shares. As the company grows, you grow. Some of those principles still last in corporate America, but just for this specific video, that's the idea behind dividend stocks. they pay back money to their shareholder, pay back money to the employees who invested in the company while working there. Not only with their time, but also with monies and capital. As a company grows, it gets profits back. So do the shareholders, which also sometimes means the employees. So it was, like I said, AT&T for years. As you can see, it's still very flat. Still, 23, 25, 20. Now it's 28. But basically, when they start paying a dividend out, that means the company is stable. Another stock I can talk about is Ford. Let's say over the last, let's just do lifetime. Again, it has the same curve. For years, stock traded at $9 or look at it, even as low as $6. But the incomes and wages were totally different. And you'll see these spikes, but after a while, it'll just go back to normal. So it's like a flat line. Unless there's a change in technology, the companies relatively trade in a short, tight range. And right now, Ford actually is not paying a dividend due to the pandemic and them going offline for last year and coming back online, building those trucks and cars again. But for the most part, stable companies will continue to pay a dividend. And so I just say all that to say, this is how I built my portfolio starting back in 2019. I started off with dividend stocks, and as I got better with handling my money in the stock portfolio, I would pepper it with different stocks. I would pepper it with a Tesla. I would pepper it with an Okta or Twilio or some sort. So my whole portfolio was not built off of SPAC stocks. And I'm not saying SPACs are bad, but just very risky stocks. So if you're starting off this journey and you're building a stock portfolio and you want to build it to 100,000 or 50,000, I would not start it off with just pure growth stocks. And I mean, you can see this second year going into 2020, I started investing more in growth stocks because you could see the curve going up, like upwards like that. And then of course, after the COVID, as when the whole market tanked, I took advantage of that and I just kept investing more and more and more growth and less dividend. But in the meantime, if I want stability and I want my stocks my stock portfolio to stay relatively the same size, I would just invest in dividends. So there's a time for growth. There's a time to invest for dividend. And if you're new to the whole stock game, I would just do dividend stocks and then pepper it in like a Tesla or Amazon or some other hot stock that you might be thinking of, Uber or a Space or Virgin Galactic or SpaceX whenever they do their public offering. But yeah, that's basically it. I mean, here's another dividend stock here that pays. I've had it in one of my videos before. Is MGM Resorts. They do pay a slight dividend. You see 0.024, and they've been around for a long time as well. And again, they had that same flattened curve, and they have some spikes. They had a spike here back in 2007. The business expanded, so there was opportunity for more profit. So therefore, the share price went up. But right now, the only news on MGM is that there's rumors that they may be acquired by Amazon. So that's the great news that MGM, a long time dividend stock, will be acquired by Amazon. So that is awesome news. And so if you guys have questions about dividend stocks versus growth stocks, and or just have any question about stocks in general, please leave a comment. Also, you can reach me via email at chili.label@gmail.com. So thanks for watching, thanks for listening, and have a great day.